know what low-hanging fruit is and target that. Now, what does that mean? Probably hear multiple times, low-hanging fruit, low-hanging objectives and targets. If you're short, okay, what's the closest short-term low? If you're entering on like a 5-minute chart, where's the nearest 15-minute low? Where's the hourly low? That's going to be the closest one. If the market just keeps dropping, how far away is that? Now let's talk about this, because this is a question I saw on Twitter, where on Forex I have a rule, like I like 30 pips as a due to swing or less. Generally, it's usually around 20 pips or so in London. If you're going to create the high of the day or low of the day, it's going to be a protraction, market protraction, where it goes the opposite direction you think the market's going to go for that particular day. It's usually 30 pips or less. And if it goes beyond 30 pips it can go to 40. But once it goes over 40, chances are it's probably absolutely not going to be where I think it's going to go. And I have to flip and change my outlook and then look for something else. Maybe not then in the same session, maybe later in the day or something like that, in like New York session. And the question came up, like, if you're saying that in terms of pips for Forex, what would be the equivalent in index futures? And I don't really have a format like that, because currencies and the algorithm that runs on those interbank levels, that's something very specific. And it's a little bit more difficult for me to nail down a specific number of handles. So the way we strip that down is I just simply look at the 5-minute and 15-minute highs, and wherever the buy side above that is, I'm looking for it to at least reach there if I'm bearish. Or if it has, say, taken out relative equal highs or a single high on a 5 or 15-minute chart, and we're now dropping already, and it's beginning the morning session 8:30, or it's crossing over to 9:30, then I'm going to look for a fair value gap. If there's a fair value gap, then I know that the stop run already took place before the opening in New York. So all I'm going to do is look for a fair value gap, and then there it is. It started its move early. But if I take that type of trade, regardless of which one I'm using for that given day, they're never going to be the same. You won't see both those instances. It can't be. Either the relative equal highs if you're bearish, or the singular 15 or 5-minute high that has buy side above it if you're bearish. We are always anticipating that type of scenario where it runs up, knocks out that, scoops up that buy side to pair with shorts, and short is the smart money. They're going to look for what? A low. And the low-hanging fruit in that example would be the nearest 5-minute or 15-minute low. Now, if you happen to have a 15-minute or 5-minute low that's like maybe 5 handles or 6 handles below, I'm not going to consider that. I'm looking for something that has at least 10 handles or more before that's my first objective. Like that's me, that's my personal, that's not my son's model. My son's models, if he gets 5 handles, he's done. I'm a little bit more diverse, and I can look for a little bit more from the market than just simply that, clearly. So I'm looking for a low-hanging fruit objective would be 10 handles below where I got in at. So I'm measuring, okay, where my entry is. I'm already looking for where I'm going to try to get in at anyway. But if I secure the entry and I'm short, and everything I'm saying here is reversed for going long. So just listen to the logic, write it out on a piece of paper, and then reverse everything directionally, and you'll have the same thing without me saying it the other way. But if you're looking for low-hanging fruit objectives, you can do your entire career with just that. Where your entry is, and if you get 10 handles below your entry, that's your low-hanging fruit. Boom, done. Now, if you're going to use what I taught as my son Caleb's model, I made that public. It's out there. I think it's in my 2022 mentorship. It's one of those videos later in the series or whatever. Then obviously you use that model, and that's that low-hanging fruit. You have a static 5 handles, 20 ticks, and you're done. That's it. You don't care what the rest of the day is going to be. And you start with that. And you start with low-hanging fruit objectives like that, and it's static. You're not trying to build a pyramid. You're not trying to turn day trades into position trades. Oh, this is going to be a one-shot, one kill. I'm going to hold it for a week. No. The path to consistency is doing things over and over and over again that are consistently resulting in yielding positive results. And the easiest way to build confidence in what you're doing is finding comfort and trust in knowing that enough is enough. 10 handles. 10 handles in the E-mini S&P. It's $500 per contract. So I don't know where you're from, but I don't mind if I got $500 a day.